Yeah, we're getting to the finish line on the financial statements here on the spreadsheets. Take a look at the last couple, and honestly there's very little for you to do, but more for you to check and verify and see that it's kind of meeting your expectations. So the first is the income statement for year one. And if you notice, it's all white cells, meaning that you shouldn't make any changes. But what you should do is kind of go along, look at each of the months, but in particular, look at your total, right? It's not unusual for a new business to show a small loss in the first year, okay? It would be unusual for a new business to show a huge profit in the first year, although some like to do that, and I'm not saying that it's impossible, it's just usually kind of rare. So by that I mean make sure that number meets kind of your expectations. And if it comes to me and you're going to start a business and you're showing a $150,000 loss in the first year, on $300,000 in sales, I'm probably going to kick it back to you and say, maybe you need to do some adjusting. Maybe you need to project some better sales. Maybe you need to project lower expenses, those types of things. So, yeah, kind of make sure. And again, it doesn't have to show a profit. It would not be unusual at all to see that first year, a loss of a few $1,000, kind of depending on the business, of course. Then you kick into the first through the third years, and it has that same first year. That's just going to be the, basically the right-hand column from there put into here. So take a look at second and third years. I've seen businesses that start out okay and then they start to lose money, in the second and third years, and we don't want that either. That might be oftentimes it's because they didn't adjust those pay scales, and they had 20 and 30% increases in pay and only 5% increases in their sales. And things kind of, if they had a business with a lot of payroll, make a big difference. Okay, so check those years too, and again, make sure they're kind of meeting expectations. Do they have to be superlative? No. Superlative can sometimes be a red flag as well. In my banking days, I probably turned down more loans that because they maybe had projections that were too optimistic versus ones that were more realistic. And so that's what we're looking for here, is realism. Okay, then lastly, you got the balance sheet. Okay, let me make that a little bit bigger for you. You'll notice down here right now it says that everything's balanced. I expect when you get done, your first year is going to be balanced. Okay, years 2 and 3 are going to show that they're not balanced, that it's unbalanced. I forget what it says then. Okay, what you'll find is that, and the reason this happened, let me explain that first. When we changed the amortization of the startup cost from 3 years to 1 year on the additional inputs tab, that made some changes, but this form didn't pick up those changes. And you're going to find, not in the inventory, but in the prepaid expenses, you're going to find some amounts, and I think other initial costs as well. Okay, so you may have numbers in, might just be in these 2 cells, might just be in these 2 cells, or it may be in all 4 of these cells, the prepaid expenses and other initial costs for the second and third year. And what you'll find is that the total of those 1 or 2 numbers is probably going to equal the difference, what you're out of balance. And so simply go up and go ahead, and this is one of those times when you can make changes to a white cell and just hit the delete button. Go ahead and delete the contents of those, and you should at that point in time be balanced. Okay, if you're not, we got something else wrong that we're going to need to go take a look at. Okay, when you're all done, take a look at some of these things. You may want to do a break-even point. I like break-even points. I don't think, but it might automatically fill this in for you, but I don't think it does. Your gross margin is going to come from your sales forecast, right? You just have to figure that out as a percentage. Although it's got a dollar figure in there. Might be interesting. Maybe that does fill it in for you. Take a look at it. I'm sure the financial ratios, if I'm not mistaken, get filled in for you. Those are going to be important when you do your financial narrative. Okay. This too, might be something that you're going to take a look at when you do your financial narrative. You might want to do a little research. This asks what's the industry norms for that type of business. You may or may not be able to find those. The cost of goods calculator was mainly for manufacturing, amortization, and depreciation. Every now and then I find out that we've done something kind of wrong or goofy, and this sometimes can be a troublesome spot. But, review it, take a look at it. It kind of tells you what you should be looking at there. Don't make any changes on this, okay? If we find out that we're not balanced, let me maybe try to take a look at that and see what it looks like. That should be it. Okay, you get done with that, you should be pretty well done. So, good luck. Hope everything kind of balances out there. Hope the income statement looks good, and then we'll be able to move on to the narrative portion.